Alright, this is Brant from TradeGuild.blogspot.com, and it's the 17th of January 2007. Anybody who reads or listens to the blog knows that I'm a perpetual bear, and I'm kind of bearish on the market right now. I've also got this new indicator that I've been using from Warden's custom line of cumulative indicators. It's one I wrote, and for the time being, I'm just calling it 3C. We're going to take a look at some stocks and some ideas in light of this new indicator. I'm going to kind of focus a little bit on that because I have some people right now who are using it and testing it. So I want to, show them a little bit of what I'm looking at, and you'll get an idea too. So anyway, we have the spiders up on the screen right now, and it looks like we got a little harami reversal yesterday in the spiders over here. The big day and the real body that falls in between it. Now 3C, again, we read this looking for divergences, and we have one right here, as you can see. As price goes up, makes a new high over here. We fail to attain the level of the highs reached over here, and since then it's really broken down pretty hard. If we take a look on the hourly time frame, we can see that it's bounced. The indicator was showing that bounce and tracking it. We move to that 5-minute time frame, and what we see here is the failure of this bounce. Really, here's the indicator should be moving up over here with price. It's been moving down since the 11th over here, so it's basically telling us, I think, that this bounce is over for the spiders. I'm going to go through real quick, but not so much detail, to show you the same situation occurring here in the Qs. Let's just go ahead and look at that daily time frame again. Again, there's the divergence. This indicator should be making new highs there with the Qs. Here's the S&P mid caps. So you can see again, there's that divergence as it is over here. This indicator should be way up. And let's take a look real quick at USO, which is the United States Oil Fund ETF. And you can see what's happening here. We have a positive divergence that's brewing as price was making a low over here. Indicators in gear with that. We make a new low, and the indicator's way up here. So that's showing a positive divergence. If we look at the hourly time frame, it's in lockstep. And if we look at the 5-minute time frame, you can see a very nice positive divergence. As price is making the lows over here, this indicator should be coming down. Instead, it's bounced up. It has blown past all of these levels, all of these price levels up around 47. So it looks like we're going to get a bounce finally in energy. I want to just show you briefly, because I know a lot of people are in biotech right now making some money. Here's the American biotech index, and we're going to look at that on a daily of that 3C indicator. And again, you see the same deal kind of going on over here, where we should be making new highs over here, and the indicators way down here. If we also take a look at the candlestick formation, it's kind of a little bit reminiscent like an evening star formation. Really, to make a perfect one, we would have seen a gap up higher and then a big bearish engulfing candle there. But nothing's perfect in technical analysis anymore. So BTK biotech index looking like we're going to see a reversal there. So if you got some nice profits in biotech, you might want to tighten up those stops and protect them. Real quick, we're going to take a look at some former ideas or things we featured on the blog here. Here's TRMM, which was first brought on the blog, I think, around January 1st. And this was a pick from KJ. So if we look at the gain that would have been realized and taken a position from them, about 13.5% there, so pretty nice gain. And if we take a look again at that 3C indicator, what we see here is price is making a low. Over here we get a slightly higher dip on a lower price, or at worst we get a confirmation of the indicator of itself as price has made a new low. So that in and of itself is bullish, and then we get this move up over here. So let's take a look real quick at hourly time frame. You can see a little bit of a divergence there start to take hold. Here's the 5-minute time frame, same deal. So if I had profits in TRMM, I would consider taking them if you trust this indicator, which it's not perfect, but it's had a pretty good track record. AATI was on the blog the 3rd of January. This is a falling wedge, and that's a bullish formation that we saw there. So it had a nice day. Let's see, what day was that? That was the 12th. It was up about 8.75%. Pulled back a little bit here. And if we take a look at the 3C again, you see that really positive divergence that's taken hold over here, and it's continued to build on it throughout that falling wedge. And it's blasted off over here. And if we take a look at the hourly time frame, again, you can see a slight negative divergence indicating that most likely we'll see a pullback, which we're starting to see. And the 5-minute time frame looks pretty good. So let's take a look at TEK, which was on the blog the 3rd of January. So this was on as a short. As you can see, if you had jumped in there the next day, you'd have about a 4% profit. So not a huge profit, but I think this position has got more room in it. Another one, I think from the 3rd, which was on the short list here, is RNOW. And this one, let's see what we would have had here, about 8%. And again, I think this one's still got more downside in it. One of the nicer ones here, IDSY, from the 3rd. And this one's down about 13%. You can see it just kind of really broke down from this little toppy formation over here. Probably due for a bounce sometime soon, so I'd consider locking in some profits, but all in all, it's probably got more downside, I would guess. Let's take a look at STEM, which was on the blog the 9th, and this was on my 3C list. Basically, we were looking at this engulfing formation that took place over here, saying, that's a reversal signal, it's not very good. And also, I believe the 3C indicator was showing a pretty nasty divergence, which you can see over here. Price is way up there. The indicator's way down here. So everything worked out as planned there with STEM. NTMD. This was a pick from David DT from tradingthewind.blogspot.com. And you can see this has been brewing a very positive divergence for about 6 months here. And if we look at the hourly time frame, this is really where it looks pretty. Let's see. Let me get that hourly time frame. Okay, so on the hourly time frame, anyway, what we're seeing here, it looks like a negative divergence has taken effect here, taken hold. So it's pulling back on that negative divergence. The 5-minute time frame, more or less, is just in lockstep right now. It's no divergence. It's just doing what it should be doing, which is a pullback, and we'll look for a positive divergence there to jump in on a position on that one. PDFS, real quickly. Okay, so this one, here's that 3C indicator on the hourly time frame. You can see a very bad situation. Here's the divergence right here. This indicator should have been making highs there, broke down. Another one that's looking pretty bad, same kind of deal here, is RMTR, and I'm not sure if I featured these or not on the blog, but they were definitely on my watch list. Here's the divergence right here, you can see, and it's broken down pretty hard off that. I've just got about a minute left. I want to mention a couple ideas real quick. INFY on the short. Okay, you can see, just go ahead and pause it. You can see this indicator should be way up there. GEOI on a long potential bounce on oil. You can see a very positive divergence there. CMOS, again, this has got a nice positive divergence, and if I can find them, those Bollinger Bands that pinch down. And finally, MER. I don't have time to show it. Actually, maybe I do. MER. Okay, so MER on the short, and that is it for me tonight. There's the negative divergence. TradeGuild.blogspot.com.